Wait, if you can invest, borrow, and spend money all in one place, is that a bank? Or is it something else entirely? Because let's be real, we've all seen those ads, the sleek interface, the promises of effortless wealth building. M1 Finance. It sounds modern, it sounds efficient, but is it a real bank? That's the question buzzing in the minds of a lot of you, and honestly, it's a good one. In a world where fintech is blurring the lines between traditional financial institutions and tech platforms, it's easy to get confused. We're bombarded with new terms, new products, and promises of financial freedom at our fingertips. But what's actually happening under the hood? Let's break it down. You've probably heard of M1 Finance as an investing platform, right? A place where you can build custom portfolios, automate your investments, and even borrow money against those investments. But a bank? That's a different beast. To understand this, we need to first understand what a bank actually is. Traditionally, banks are institutions that accept deposits from the public, lend money, and provide other financial services. They're regulated, insured, and play a crucial role in the economy. They hold your money, ensure its safety, and facilitate transactions. Now, M1 Finance. Does it do all of these things? The short answer is, not exactly. And that's where the confusion starts. M1 Finance is, at its core, a financial platform that offers a range of services. Think of it as a central hub for your financial life, but not a bank in the traditional sense. It's more of a brokerage and financial technology company. Let's dive into the specifics. M1 Finance offers several key features. M1 Invest. This is their core offering, allowing you to create and manage custom portfolios, called PIEs. You can select individual stocks, ETFs, or pre-built portfolios. The platform automates your investments, rebalances your portfolio, and even allows for fractional shares, making investing accessible to everyone. M1 Borrow. This feature lets you borrow money against your investment portfolio. It's a line of credit, not a traditional loan, and the interest rates are generally lower than credit cards. M1 Spend. This is where things get interesting. M1 Spend offers a checking account and a debit card. You can deposit money, pay bills, and make purchases. M1 Plus. This is their premium subscription service, offering additional perks like higher interest rates on your checking account and cashback on purchases. So, you have a checking account, you can borrow money, and you can invest. Sounds like a bank, right? Not quite. Here's the key difference. M1 Finance is not a chartered bank. It doesn't hold your deposits directly. Instead, they partner with FDIC-insured banks to provide banking services. Specifically, your M1 Spend checking account is held at Lincoln Savings Bank or B2 Bank, and these are the institutions that are FDIC-insured. What does FDIC insurance mean? It means that if the bank holding your deposits fails, your money is protected up to $250,000 per depositor, per insured bank, for each account ownership category. This is a critical safety net. So, while M1 Finance provides the interface and functionality of a checking account, the underlying infrastructure is provided by traditional banks. This is a common practice in the fintech world. Companies like M1 Finance leverage the existing banking system to offer their services without having to become banks themselves. Think of it like this: M1 Finance is the storefront, the user experience, the technology. The partner banks are the warehouse, the infrastructure, the regulatory compliance. Now, let's talk about the borrowing aspect, M1 Borrow. This is another area where M1 Finance differs from a traditional bank. When you borrow money against your investments, you're not getting a traditional loan. Instead, you're getting a line of credit secured by your portfolio. This is called a portfolio line of credit. The advantage here is that the interest rates are typically lower than credit cards or personal loans. However, there's also a risk. If your portfolio value drops significantly, you could be subject to a margin call, meaning you'd have to deposit more money or sell assets to cover the loan. This is a crucial distinction. Traditional banks assess your creditworthiness based on your income, credit history, and other factors. M1 Borrow, on the other hand, is primarily based on the value of your investments. So, M1 Finance is offering a borrowing product, but it's not the same as a bank loan. Let's address the investment side. M1 Invest is a brokerage platform, not a bank. Brokerages facilitate the buying and selling of securities, like stocks and ETFs. They don't take deposits or lend money in the same way banks do. Your investments are held in your name at a clearing firm, which is a separate entity. This is important to understand. Your investments are not FDIC insured. They are subject to market fluctuations and could lose value. However, they are protected by the Securities Investor Protection Corporation, SIPC, up to $500,000, including $250,000 for cash claims, if the brokerage firm fails. So, M1 Invest is a brokerage offering investment services, not a bank. Now, why does this distinction matter? Why is it important to understand that M1 Finance is not a bank? First, it helps you understand the risks and protections associated with each service. Knowing that your checking account is FDIC insured provides peace of mind. Knowing that your investments are SIPC protected helps you understand the safeguards in place. Second, it helps you make informed decisions about your finances. Understanding the differences between a brokerage, a bank, and a fintech platform allows you to choose the right tools for your specific needs. Third, it helps you avoid confusion and misinformation. In the age of social media and online advertising, it's easy to get caught up in the hype. Understanding the underlying mechanics of these platforms helps you separate fact from fiction. So, is M1 Finance a real bank? No, not in the traditional sense. It's a financial platform that offers a range of services, including investing, borrowing, and spending. It partners with FDIC-insured banks to provide checking accounts and leverages technology to offer innovative financial products. Is that a bad thing? Absolutely not. In fact, it's a testament to the innovation happening in the fintech world. Companies like M1 Finance are leveraging technology to make financial services more accessible and efficient. They are building on the existing financial infrastructure to create new and exciting opportunities for consumers. The key takeaway is to understand the distinctions. M1 Finance is a powerful tool, but it's important to understand how it works and what protections are in place. It's about being an informed consumer, understanding the landscape, and making decisions that are right for your financial goals. Don't be afraid to ask questions, do your research, and understand the nuances of the financial products you use. Fintech is changing the way we interact with money, and it's important to stay informed. With that said, thanks for watching, and until next time.